5 computers is all the world's gonna need. The point after that is where the value is created. So track the crash. Don't dive into the crash unless you're feeling really frisky. But the organizations that come through that crash, the technological approaches that come through that crash are the ones that matter. And all of this is just practice. It's big practice, it's important practice, a lot of money's flying around, but it's just practice. But it's practice for something very important. So we'll be around for a few minutes if you want to talk, and thank you.
Hopefully all of them will be sticking around for a drink at the end. If you have more questions, it's a good time to ask. Great. So we've got one more speaker before the end of the day. Oh, it's on. And I hope you'll join me in welcoming him. Alex Nascimento is here from UCLA's Blockchain Lab to talk to us about security tokens and the future of blockchain.
So, pardon for being the last one of the day and holding you from the drinks. So, I'll try to make this entertaining. So, let's put this out. Alright, cool. So, my name is Alex Nascimento. I hope you guys can hear me. And I'm the co-founder of the UCLA Blockchain Lab and managing director of 7cc Investment. So at the lab, we try to educate people, which is essentially what we're doing in this room here. Create a community, research and do development, and I teach a class called Blockchain Business Applications, and one that's going to be offered in the spring on security tokens. So this is kind of like my passion, because I'm not a lawyer, and I'm not here to provide you any kind of insight. So please, before you do any kind of ICO or STO project, contact one of the folks that are hosting us in this beautiful office here. All right? So just take my word for it. So here's kind of like the idea. As we all know, blockchain doesn't allow for double spend. So if I have just one Mona Lisa, I could only sell this Mona Lisa and not sell them repeatedly, which allows me for a single immutable file. And if we're talking about single immutable files, we can use single immutable files to represent any kind of value on the blockchain. That being a share in a company, fractional ownership in this beautiful piece of art, or maybe a 10th of ownership in this very nice office. All right? So smart contracts work pretty seamlessly. Some people in the room here were discussing about how it works. I like this graph because it kind of encompasses in a very simplistic form. It matches a buyer, a seller, you have a registry, which is this idea of a blockchain, which keeps a digital ledger where everybody has access to of who owns what of that single immutable file. And then you connect it with some kind of back end in the real world that says, hey, you know, if we're going to go to litigation, we can fight this over and give it to the right owner. In this case of a house, it would be a clearing and settlement agency. So, assuming that this is all cool, we come to 2018, right, where utility tokens and people that might go to jail are being scared and are probably moving outside the country. And people like myself, we thought, well, this has a lot of potential as long as we do it within the laws. And it is and the lawyers in this room here will agree with me, that the laws are set in the United States for you to do this. If you follow the Jobs Act and all the different exemptions, you can eventually reach a public offering, right? So no need for doing something outside of the realms of the law. So as many of you know, we all started this industry doing utility tokens left and right. And utility tokens, in a definition, they are supposed to be kind of a app coin. Or like I like to say in my class, you go to Disney and you buy Disney dollars, right? And it allows you to go on roller coasters and buy hot dogs and do all sorts of fun things. But it does not allow you to make an investment on the Disney stock. If you want to make an investment on the Disney stock and want a piece of Walt Disney's empire, you need a security token, which is a federally regulated investment object into a corporation, or also a credit relationship, bond, option, any kind of that product. So if we think about it, a security actually holds a type of monetary value, or in a traded corporation, rights of ownership, options, any of those sorts of fun things. So what is essentially a security token? The security token is defined as a representation of value in the blockchain. So you could do real estate, you could do derivatives, you could do debt, you could do equity, you could even do past utility tokens that were deemed utility, but then the SEC came and said, no, everybody here is a security. So Hyman, director of the SEC, said digital assets that represents rights, in this case voting rights, or financial interest in a company will remain a security token. That, for me, who is not a lawyer, tells me that if you're trying to do any kind of fundraising or any kind of investment, you are going to fall under a security umbrella. So what are the type of security things we can do, and how can they change the industry? A couple of different things. Real estate, in my opinion, is the one that's going to be the first one to disintermediate an industry, because it's very simple for you to speak the same language as real estate investors and brokers and institutional guys that have no idea what a blockchain is. If you can say, hey, you can own a fraction of this building, and I could sell a fraction of this building to people in China, to people in Brazil, to people in the US. That's simple, that's straightforward, people get it, right? And you could trade it. Startups, for funding and investment on startups, it would disintermediate VCs. Mature companies, like let's say someone owns like 20 restaurants here. How hard is for you to get money in the bank? You gotta go to Chase, you gotta go to Bank of America. With blockchain and security tokens, you could raise from the crowd, giving your investors a piece in one of your 20 restaurants. Energy, credits to watts and tokens that can be traded in the future. Art, units in an art gallery, units in an art collection, as well as funds. There are a few VCs in the room that could bring more LPs into their company by tokenizing ownership or limited partnerships. Right? So this is a very interesting kind of slide that I like, because this talks about what goes into the ecosystem of security tokens today. For the ecosystem to run, we need people that do custody and trust. And you can go and talk to the guys at Prime Trust and BitGo. You need to issue a token. You can go to my friends at Swarm or Republic or Securitize. Then you need a broker dealer, very traditional. You can go down to Todd Lipman here at Propeller in New York City, or even Coinbase. On the other side, we need lawyers, right? This is essentially an investment contract. You can go to Fisher Royals, DLA Piper, or even our hosts here. You also will need a trading platform. T0, Open Finance, Gibraltar, and if you guys have been following the news, Harbor just came out with the first trade of security tokens, and Open Finance also did a recent trade. So these things are happening. And you also need compliance, right, to verify who are your investors in that security token, KYC, AML, all that fun stuff. You can use Verify Investor or Netkey. Netkey is out in LA. Cool guys in LA. So some of the benefits of doing this, like we've been talking in this room about why are you doing this on the blockchain, right? We have equities market, we have bonds market. Why do we need to do this on the blockchain? Cost reduction, significant. Faster settlement. The guys in the past panel were talking about it. Goldman Sachs estimates that this could be like a $6 billion cost reduction. Automated revenue sharing and dividend payments. More or less, there is about 3,000 companies publicly traded in the US that paid dividends in an average of 4%. That is minuscule compared to how many companies are in this country. Right? So imagine the potential for all these other companies that are not publicly traded to share dividends and payments automatically. Startup fundraising, obviously STOs, equity crowdfunding on steroids. Security tokens also have a much lower risk of redemption. If anyone here is an LP in a venture fund, try to capture your money back. You know, your GP might not want to answer your phone. And also, like, if you invest in a building and you want to sell your part in that building, you need to find someone who's going to take your part, right? Advantage of secondary liquidity. Imagine a global marketplace where you could exchange ownership of a variety of assets and 24/7 markets. If you guys are in the crypto space, send an email to someone at midnight in the crypto space. You're going to get an answer in 30 minutes. Did you not? Right? And it facilitates transfer of ownership. You don't need to know that person. If you have an ownership in a painting, you could sell it to someone in Japan who you never heard or saw before. Which today you would need to go down to Soho, find a gallerist, and have him call his friends to sell your painting. Problems and opportunities. Obviously, there is a lack of liquidity. We about today have 2, maybe 3 security tokens being traded. Unclear regulation. Everybody's scared of going to jail, so you need lawyers. And interoperability among STO issuing platforms is an issue because different platforms are issuing in different protocols. We now have the ERC 1404, which is a very interesting protocol on the Ethereum virtual machine, which allows you to upload a list of people that can trade that specific token. So if you are under Regulation D, which is only for accredited investors, you can upload a list of addresses of accredited investors that can trade that token. So you can keep compliant. But what are the opportunities? I was in Dubai recently and people were asking me, why does everyone follow the US? Why does everyone follow what the SEC does? Right? We don't need them. Well, let me tell you this. Global equities market is about $70 trillion worldwide, which the US represents 39% of it. And the bonds market is 92 trillion, which the US represents 42%. So if one guy in the room runs 50% of all trades, guess who's going to dictate? Right? Please. And the other opportunity is that we have about 4.1 billion people on the web. Those could be potential investors, assuming this market matures and we end up having the security tokens as Reg A pluses, which are public offers to the general public. If you don't believe me, I'll be sad, but then just follow the news. All right, NASDAQ was 4 things you need to know about security tokens. Forbes was saying 7 ways tokenizing traditional assets would launch security tokens in 2019. And there's already Israeli investment funds offering crypto ownership. And these are all like from the later part of 2018. Some different case studies, which I find interesting. IBM is already selling cloud-based services for companies to develop and deploy security token products on the blockchain. Microsoft is working with R3SAB, which is an amalgamation of 40 banks, trying to make different products out of this. Japanese banks are already using security platforms to make trades worldwide, and NASDAQ, right here in your hometown, is already using this system or security token systems to validate investors. So this is real, right? This is gonna change the equities market for good. Now, if I had a crystal ball, what would I say the future is? I would say 2019 is the year you're gonna see institutional money coming into play. And most of my conversations when I come to New York is with institutional guys that know nothing about technology, right? And they're all very excited about pushing these products down to their wealth management and all their clientele and repackaging them into baskets of goods. Security tokens are going to be the next evolution of a potential IPO and bring a lot more liquidity. And like I said, if you think about interoperability and atomic swaps is a fancy tech name for interoperability, like blockchains can talk to each other. We now have ERC 1404, which stands for Simple Restricted Token Standard, which is the one I was talking about. You can upload a list of addresses of investors that can trade these tokens among themselves. Piece of advice: you can avoid several reporting obligations by focusing on the number of people that hold your security tokens in the US, and make sure you hire a lawyer. This was a little plug for our hosts here. What do we do at 7cc? We mostly invest in STO projects. We advise them, and we help companies take opportunities in the blockchain investment space. I will just make one simple correction. That is not a Bill Gates quote. He might have stolen from Amaro's law, which states we tend to overestimate the effects of technology in the short run and underestimate them in the long run. I personally think security tokens are very, very short term. My name is Alex Nascimento, and if you follow this link, you can sign up for the blockchain business application course at UCLA, which is going to be offered online. So if you're all the way on the other side of the country, you can get access to the content. More than happy to answer any questions, and I think I did that in record time so that we can go for drinks. Questions?
Don't let the drink stop you from asking.
Oh, wait.
Additional thoughts on the regulatory environment for securitized tokens when you think that loosens up, clears up in the SEC's perspective?
So,
What was the question? Yeah, can you repeat?
yeah, I'll repeat the question. Like, any thoughts on how the SEC is seeing security tokens? So there are two thoughts, right? One, I'm not a lawyer, so this is not legal advice. As of today, and I was a little bit on a travel mode recently, so I may have lapsed maybe a few days. But as of today, there is no security token that the SEC allowed it to be a Reg A+, which is a public offer, as far as my knowledge. That doesn't stop you, me, and anyone here to issue a security token under an exemption D, which you can go to accredited investors, right? Will this evolve, and will people continue to pay the high fees of expensive law firms to get them through from a Reg D to a Reg A? I'm sure they will, because guys like T0 raised a lot of money. So money is not an issue, lawyers are not an issue, and this is a movement. One of the ways I try to explain Bitcoin to people who don't know it is this is a social movement. People want this, right? And as long as people want this, and the regulation is in place, and the regulation is actually in place, if you follow the Jobs Act, you should be able to get to a public offering of a security token under Reg A+, then I think that this should be something we will see half 2019. I don't know if I really answered your question, but it was my best effort. Yes?
I know you said that you manage a lot of STO projects and things like that. Is there a universal platform that you guys are using, or how does that work?
Yeah, so there are a bunch of platforms. Swarm is a really good one. I like the guys from Securitize. Security is a really good one. Republic is another good one. You know, from your developer standpoint of view, it's nothing different, right? I'm just issuing a more robust with more restrictions smart code token, smart contract token, right? And with the advent of a ERC 1404, you could upload the list of potential addresses that can receive and exchange that token. So in essence, I don't see that much of being a barrier in the market moving forward. Probably will come up to a much faster interoperability among tokens in the security market. Why? Because there's a lot of money behind this, right? And companies want to finance this. So probably you'll see a lot more of a dumbed down version of tech in security tokens to make sure that they are easily tradable than you would see in a lot of other operations like supply chain and things like that, which need to manage a variety of smart contracts all in one.
So Alex, I mean, you know, some of the projects we've seen to this point seem to be very geared towards financial services, right? I mean, infrastructure plus financial services. From your experience kind of traveling the world and speaking to people, where are you seeing that dynamic? Is it still going to be in the financial services space, or are people like branching out into other areas to provide this social experiment platform?
Yeah, so that's a great question. So which other areas would I see this going towards, right? I personally think that it's going to be very much traditional financial world, right? And one of the things I started in this space, and people used to point fingers at me down in Santa Monica, and I'm not going to say who pointed it, but the people that are famous in Santa Monica say, Alex, you're crazy. This is never going to work, right? This is all about decentralization, and security tokens are all about demand and institutional money, and it's completely against what we believe. And my answer was, you're going to go to jail, right? And it's just like the world, like, you're going to fight City Hall? No, you're not going to fight City Hall. You're going to fight banks and institutional players with billions and billions of dollars? No, you're not, right? The latest data point that I read was that we had about 370 crypto funds worldwide that manage a total of about $10 billion. My friends from business school that work down here in Wall Street alone manage more than $10 billion in their portfolio. So this is a Wall Street play. And the first one that I will see coming along to maturity is real estate, because that's an easy thing for people to understand, people that are not in this space. Yep.
Can you talk about custody?
Yeah, sure. So custody is an issue, right? And custody is, great question. Custody has been the main barrier for this space, because institutional players cannot hold an asset that they don't know where it is. Who's holding the private keys? The intern, who's the only guy who understands blockchain, right? So that's not gonna work. So Fidelity and the ICE group have been working on projects of custody to offer them as institutional grade custody services. And from what I've spoken to the guys at ICE and my connections at Fidelity, they're very close to launching those in the beginning of 2019, which we're already seeing, right? We're seeing Harbor doing exchanges. We're seeing different companies in Singapore that have ATS licenses and broker license coming into market and offering kind of easy products like real estate fractional ownership and hotels and buildings and things like that. So I think that that's very close. That's a very good question, because that was the main hurdle in all my chats over the past year with institutional investors. Who's going to hold this, right? Like, who's going to hold the private key? Who's going to send me a report every day with the value of this? Now, if we have players like the ICE group and Fidelity providing those services, I think it's going to be a follow the leader. You're going to see large institutional players setting up the rules, and then the SEC and other regulators will be very comfortable in saying, okay, well, if these are best practices done by people that we believe, then let's let the market behave as it should. Yes?
You just touched on a point, I just want to emphasize, they already talked about securitization of it, but certainly the SEC's got to chime in with more specific regulations. The other regulators would not need jail, the IRS, and IRS has been silent about what this is intended for. It's very interesting how your perspective about the true costs of securitizing tokens, what you throw in the tax part of the equation.
Yeah, so I guess I revert the question to you, you're an expert in the field. I haven't seen anyone yet come out with a solution that backtracks your trading, if that's what you're alluding for.
The IRS is silent, just like the SEC has been in 2017, about how they view this. The only piece of literature in the IRS you can point to is that they don't recognize it as security. They kind of default to say this like property. You just sold property, you have a tax liability immediately when you issue that. And I think, what you're gonna see, I believe, in the next year is, as tax filers that brings a lot of money in tokens in 2017, just filed their returns in 2018, are gonna have a wake-up call when the IRS shows up and says, yeah, where's my tax bill?
Yeah.
And we'll see what kind of headwinds is gonna get in the process.
That's what I used to say when I, go around in Santa Monica. I'm wrong, and you're gonna go to jail. I'll send your tape on Sunday. Last question, because I think we, all right? Yeah.
Yeah, about this real estate securitization, so you can basically sell piece of real estate everywhere over the world without knowing who buys it. How does that will work with AML KYC?
Yeah, so
What's the
I'll just
question?
move back to one slide. I'll reiterate the question. So in the ecosystem, oops. Yeah, in the ecosystem, so the question was how does KYC and AML works if you're selling fractional ownership all over the world, right? Unless you have, in my opinion, these 6 players working together in a cohesive ecosystem, this is not gonna work. But these are only a few of the many players that are already working on these solutions. So compliance services, which will verify KYC and AML, are now done by verifyinvestor.com, NatKey, and I can also provide you with a few other names in this space. And this is growing, right? This is like before anything is being traded, there's already like a good 5 or 6 companies in each space. Imagine 2019 when they opened the floodgates and you have brokers selling basket of goods to your grandmother on their, Fidelity account. So I hope you guys all enjoyed. I'll be here for the 2 days, happy to answer questions, connect you guys with the folks down at UCLA. If you come down to LA, please say hello. And thank you very much.
Thank you, Alex.
Thank you.
We're about to wrap up, but before we do, I thought we'd have a few more thoughts from our chairs, Az and Kelsey. If you guys want to come on up and do your closing remarks.
Coming from the
And then we'll
regulatory
get
side.